everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. So again, let's go over the market real quick and then we'll go into our trade. And here's the market. Obviously, there was a time when things were kind of rocky about a month ago, but in the last few weeks, it's been nothing but straight up and blue skies apparently for the stock market. And that also means that volatility has dropped significantly because when the market goes up, generally speaking, volatility goes down. This is the S&P 500 over here. We always look at them all. Here's the NASDAQ. Obviously a very similar picture. And again, we always look at the Russell, which has generally been in the same mode, but it seems to be just kind of lagging slightly. The SPY and the NASDAQ seem to be at all-time highs, while the IWM is near all-time highs, but not quite there. But again, they all look fairly similar. So what we're going to do this week is I'm going to show you how to play direction. So this is totally up to you. So when we play direction, we usually buy verticals because it's more of a 50-50 shot. We're playing direction. More risk, more potential reward. So when we're looking to buy verticals, unlike sell things, we're looking for low volatility. So if I look here at the IWM, you can see right here the volatility is 14. So just remember this number. So the IWM is at 14. If I go to the NASDAQ, you can see this is at 4 down here. And if I go to the S&P 500, wow, look at that, 0. Can't get much lower than 0, right? So out of all these three indices, the SPY has the lowest volatility, and we're looking to buy verticals. We want low volatility. So this is it. This is the perfect one. It's at 0. It can't get any lower. So in the case of SPY, I'm going to let you decide because direction is a 50-50 shot. I don't know any more than you know. So what we're going to do is, for those of you who are trend traders and believe the stock market is going to continue up from here, we're going to buy a call vertical. For those of you like myself that are contrarians, we're going to buy a put vertical with the assumption the market's going to basically level off and go down from here over the next 30-ish days. So how do we do that? We go over to the trade page. For this trade, I'm going to go right here to the 33-day expiration cycle just because 40 is there, but 33 is more liquid, and really we're looking for direction to make the move relatively quickly. I'm not looking for 45 to 60 days. Is this thing going to go up or down? If I'm a strong believer in direction, my belief is somewhere in the near future, which might be the next week or two, I think it's going to move in my direction. When I do that, I want a shorter time expiration. I want it closer to 30 than 60 because I want the move to give me a profit, and the shorter the time, when it moves, the bigger the reward. Generally speaking, when I'm selling things, I'm more in this at the 40 to 60 range because I'm doing duration over direction and I want the time to basically let my scenario play out. I'm not trying to make money quickly. I'm going for the long-term view that, hey, I think this is going to go up, but it might take a while. Where this is, hey, where we're at now, I think it's going to shoot up to the moon from here or crash from here. I want to get paid. So we open this up. And these are easy to set up. What we do is we like to put the stock price in between our two strikes. So the stock price is $529.50. So that would make it between these two strikes, right in the middle. So if I want to be a contrarian, I'm going to buy a put vertical. So I'm going to buy the 530, the strike price just above the stock price, and sell the put just below the stock price, right? Buy just above, sell just below. The stock price is right between our two strikes, which is what we want. And the price here is around 43 cents, which tells me when I go to do the call side of this, because it's the same trade, right? Not the same trade, but it's the exact same strikes, that when I do the call side of this, it should be in around the 57-cent range because it should equal $1, right? Because it's the exact same trade. One's going up, one's going down. So for the $1 wide strikes, these two numbers should equal about $1. It's not going to be exact. The market is closed, but that's kind of what I'm looking for. So let's just do this blast all so we can look at them both at the same time. And when I buy the call vertical, I'm putting this between my two strikes, but I'm now buying the 529 and selling the 530. So I do that. I say buy vertical. This is the call side. And now you can see I'm buying the 529. I'm selling the 530, so the stock price is again right between my two strikes, which is just what I want. And this is going to cost me according to the market around 61 cents. Little high for my blood. I'm looking in around the 55-ish scenario is what I really look for. But remember, these should really equal about $1. So it's close. When the market's open, they should equal almost $1 exactly. So I'm guessing when the market opens, these are going to shift a little bit. Even if the stock price stays here, this might be a little bit higher, this might be a little bit lower. But again, generally speaking, I'm looking to pay around the 45 to 55 cent range for my verticals per dollar worth of strike. Because what this means is, let's just make the numbers easy. I'll do it this way. If I pay 45 and it's $1 wide, the max potential loss, which is what I pay for it, plus the max potential profit has to equal my width of the strikes, which is $1, which means the most I can make on this trade is 55 cents or $55. Conversely, over here, if I pay 60 cents, it has to equal $1, so the most I can make is 40 cents or $40. So that's the most I can make. This is what I risk. This is what I can make. And generally speaking, I like to be in the 45, the 45 to 55 cent range. But if you're happy risking 60 to make 40, absolutely fine. Everybody's rules kind of become personal after a while. My rules aren't hard and fast with buying verticals. You can be a lot more leeway. They're very strict with selling. With buying, it's kind of like, what are you willing to risk for what are you willing to make? So that is our trade for tomorrow in the S&P 500. If you're a trend trader, you will buy the call vertical. If you're a contrarian like me, you will buy the put vertical. Look to pay around the 45-ish to 55-ish cent range. Higher or lower is fine, depending on what you want to do. Stock price should be between our two strikes. And that is our trade in SPY because it has 0 IV rank for tomorrow. I am excited to let you know I've completed a book that is now available to everyone that wants to get it called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero as far as knowing absolutely nothing about options all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe it's such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.